let's put Nikola aside, because Pross brought up a good point that it does feel like there is this enthusiasm once again around EVs when you think about what's been happening with Tesla as well. Sure, there was that announcement with a partnership with GM as well as Ford, but is there a bit of FOMO trade happening? I mean, you talk about AI as one.
Yeah.
EVs.
So I think we've seen waves of that, to be honest. I think we're kind of seeing some nice movement in the stock prices. You look at Ford over the last couple of days, going from, recently between 11 and 12 over 14, closing in on 15. My concern here, just trying to capture the conversation we had earlier too, is, if rates do go higher, that means borrowing costs are higher. That's another headwind for automotive loans. Right, because they will tick higher too. So the whole thing that's fascinating to me is the real transformation in this industry, where everybody, right, Ford, GM, Stellantis, Ferrari, Volkswagen, they're all leaning into this EV transition, and there are reasons for it, and including some. At least here in the States, some tax credits. They're helping foster, EV adoption, right? There's some, EPA regulations and all this other stuff that are going on. So the industry's moving that way. I just think that, it's possible that it might take a little longer than expected to hit some of these forecast numbers that are out there. And at the same time, right, you have to ask yourself, okay, companies are spending and investing to do this. But if we do see a slowdown because of higher borrowing costs, what does that mean in the near term for their profit picture? But
to pick up on that point about the higher borrowing costs, you were talking about tech earlier. We saw these stocks get hit at the start of the rate hiking cycle, right? The expectation was that these companies aren't necessarily profitable. They've got a lot of debt. These are the companies that are going to get hit as a result of higher rates. And yet it feels like we're kind of back to where we were before that in terms of the enthusiasm. Sure, in tech you can talk about AI specifically, but EV, the growth has been happening. Why now? Why are we seeing this kind of
I think you
rally?
I think you got to kind of differentiate, right? So there are some larger established players like the ones that I mentioned, Ford, GM, and then there's the ones, the Rivians, the Nikolas, and the like. And it's very simple. You can't churn out, what would we hear, 10, 20 vehicles, right? And that's not going to cover the cost of your operation. So I think there's a reason that some of these stocks are down towards the bottom. But I also think, though, too, if you look at the automotive industry from a structural perspective, it really tends to solidify around a handful of players. And again, if you take another look at it, you look at consumer electronics or some others, the vast majority of market share tends to be concentrated around, again, a handful of players. Will all of these companies make it? Probably not.
I feel like the Nikola part is more memey than anything else, right? It does feel like it's interesting to me that the meme stock craze has persisted in different ways. It's more like little flare-ups of these individual situations and short squeezes, perhaps. For example, Nikola, something like 20% of its float is shorted. But I don't know how much at one point it felt like investors needed to pay attention to it to some degree, other investors who weren't part of it. Now it feels like you can kind of ignore it. I don't know.
It could very well be people are just looking for a quick trade too.
Yep.